At the Federal Reserve, we are strongly committed to achieving the monetary policy goals that Congress has given us: maximum employment and price stability. Today, the Federal Open Market Committee kept interest rates near zero and maintained our asset purchases. These measures, along with our strong guidance on interest rates and on our balance sheet, will ensure that monetary policy will continue to support the economy until the recovery is complete. Progress in increase our holdings of Treasury securities by at least $80 billion per month and of agency MBS by at least $40 billion per month until substantial further progress has been made toward our maximum employment and price stability goals. Our asset purchases have been a critical tool. They helped preserve financial stability and market functioning early in the pandemic, and since then have helped foster accommodative financial conditions to support the economy. At our meeting that concluded earlier today, the committee continued to discuss the progress made toward our goals since the committee adopted its asset purchase guidance last December. We also reviewed some considerations around how our asset purchases might be adjusted, including their pace and composition, once economic conditions warrant a change. Participants expect that the economy will continue to move toward our standard of substantial further progress. In coming meetings, the committee will again assess the economy's progress toward our goals, and the timing of any change in the pace of our asset purchases will depend on the incoming data. As we've said, we will provide advance notice before making any changes to our purchases. On a final note, we announced the establishment of 2 standing repo facilities, a domestic one for primary dealers and additional banks, and another for foreign and international monetary authorities. These facilities will serve as backstops in money markets to support the effective implementation of monetary policy and smooth market functioning.
The last Fed meeting, and are you concerned to see nearly $1 trillion a day pouring in through that facility?
So, on the standing repo facility, what is it going to do? So, it really is a backstop. So it's set at 25 basis points, so out of the money. And it's there to help address pressures in money markets that could impede the effective implementation of monetary policy. So really, it's to support the functioning of monetary policy and its effectiveness. That's the purpose of it, and it's set up with that purpose in mind. Your question on the RRP, so. We think it's doing what it's supposed to do, what we expect of it to do, which is to help provide a floor for money market rates and help ensure that the federal funds rate stays within the target range. It's essentially what's happening is that it just results in a lower aggregate amount of Federal Reserve liabilities that are in banks in the form of reserves and a higher amount of Federal Reserve liabilities in money market funds in the form of overnight RRP balances. So that's all that's really happening there. And we expect it to be high for some time. It's being driven, of course, by the relatively lower quantity of Treasury bills and also the onset of the debt ceiling and the decline in the TGA, things like that. So we don't have a problem with what it's doing. It's kind of doing the job we expected.
And you don't see any issues with disaggregating, markets from, investing in private money market securities, like the idea that the Fed's footprint in money markets is getting too big. You don't see any issues there?
Not really, not at this point. Private money market funds are choosing to invest because the rates are attractive. At some point, the rates will not be so attractive as the whole rate cluster normalizes, and you'll see it shrink back down.
Up. In other words, you've stimulated demand, but savers and companies like insurance companies and pension funds are getting hammered by the low rates, and they're wondering if the balance hasn't started to shift away from benefiting the economy to doing more harm than good.
Asset purchases were just a key part of our response to the critical phase of the crisis. They really helped us restore market function to these key markets really which are very, very important to our economy and the global economy. And then they were a big part of creating accommodative financial conditions to support demand. They were strongly needed. It was that commitment to continue asset purchases that provided strong support for the economy and has been a part of the story for why the economy is so strong right now. So we said we would taper when we achieve substantial further progress, and we're going to honor that commitment. I mean, it's and again, we're talking about it right now, and meeting by meeting, and moving in that direction. We will taper when we reach that goal, and we'll provide more clarity on that as we go, as is appropriate.
Welcome to the Crypto Teacher. And guys, I come back with that video just to make you think. And we had Jerome Powell in the house. And he came with a special gift. That's right, guys, more repos. They're going to be pumping even more money into the market. Plus keeping treasuries and mortgage-backed securities. We know the plan, guys. They're printing the dollar out of existence. The Fed is going to wait until September to let us know they're going to be tapering. Also, guys, we know the digital yuan is going to be effective the first part of next year. We know what the solution is for the fourth industrial revolution, cryptocurrencies, but they're going to kill the dollar. And the United States, remember, in September, all this free money runs out. Remember what the New World Order works off: problem, reaction, and solution. We already have the problem. Now they're going to wait on the reaction because they're going to take this free money away temporarily. The people are going to go to the government and beg for this free money. And then they're going to airdrop those cryptocurrencies. Well, all your privacy is out the window. Tell you what, when, and where, how to buy. Get your family educated ASAP. Because when it comes to the New World Order, it's all planned out. Y'all have a wonderful day.
This yesterday on the panel that I think central bank digital currencies were concocted in hell by Satan himself. They are incredible control by governments over everybody's bank account, and they are they're going to create a void of privacy for every individual citizen. I think they're horrible, but I think that's where
we're going to a different economy, and we're going to be learning more about that as we go. But clearly, we're learning that things can be done from remote locations. We're learning that technology can replace people even more than we thought.
We're not going back to the same economy. We're recovering, but to a different economy, and it'll be one that is more leveraged to technology. And I worry that that is going to make it even more difficult than it was for many workers.
In Silicon Valley, and my friends who work in technology know that what we did to the manufacturing workers, we are now going to do to the retail workers, the call center workers, the fast food workers, the truck drivers, and then even bookkeepers, accountants, insurance agents, lawyers, and on through the economy. So what happened to the manufacturing workers is a very clear sign.
This effort. And China has big plans for this. They intend to seed their digital yuan into the global environment by giving it away to visitors at next winter's Olympics. When they arrive at the airport, they're going to get yuan digital wallets. They're going to receive digital yuan. They're going to use it throughout their visits to Beijing, and then they're going to take it back to their home countries. They see this as a huge advantage. Why? Because who controls the underlying protocols, who controls the underlying standards of the future of money will control the future of money.
The most powerful person in the world is the storyteller. The storyteller sets the vision, values, and agenda of an entire generation to come. Steve Jobs. And guys, I truly believe in this. When you look at the New World Order, they're the storytellers. And that's the reason why I wrote my New World Order book. But guys, now it's time to change the current generation. And I wrote 3 kids' books. I love the Trinity because I understand the power that's in it. So I have 3 books. We have an opportunity to change the generation, to educate, not just me, but I want to show you that I take action on a daily basis. And I want you to take action on a daily basis. Whether it's your job, whether it's in your community, we have an opportunity right now to educate the masses. I posted this on my Twitter account. Please share, but this is a short clip of the 3 books. There's going to be a clothing line and action figures. Please get these books for your kids, nephews, cousins, friends, so therefore we can start the re-education now. Because as we see, the 4th Industrial Revolution foundation is definitely here. Robots, algorithms, drones, taking humanity out the picture. We have to re-educate. But let's get into the video.
Part 1. King Joshua and Drama Tam save the village. Part 2. King Joshua and Drama Tam save New York from COVID 33. Part 3. King Joshua and Drama Tam goes to China.
It's mandatory to get part 1, part 2, and part 3 of this series. It's time to re-educate Generation Z.